Hello and welcome to Wine and Real Estate. And at the time of this recording, I'm actually spending my birthday with Steven. So,
Oh,
Steven, today is my birthday. So,
happy birthday. I didn't even know that.
yeah, the 4th of July. So, I'm a very independent person, I guess, like
Amazing.
goes with the birthday. But so, Mr. Steven Leconte, really exciting to have you on Wine and Real Estate. We're not going to drink wine because right now it's 8:36 a.m. Even though it's my birthday, yeah, let's be a little bit nice and yeah to our bodies, especially for me. I'm now 43, so yeah, I can't drink at 8 a.m. Would not be good. So welcome, Stephen. I'd love for you to share with my listeners your story. How did you start in real estate investing, and what you're up to now? I see some marketing, some AI stuff, or
Yeah.
variety of things. So I'm really excited. I'm a marketing guy, so I love that. And then real estate, of course. And if you have some wine discoveries, I know it's early, but if you enjoy some wine, I'd love to hear about that. So let's start with your story. How did you get started, Stephen?
So I got started in real estate about like 12 years ago, roughly. I got my first started by buying a condo, a three-bedroom condo that I lived in, and I was renting rooms in my condo.
Cool.
Three bedrooms, so I rented two rooms, one to a friend and then one to someone that I found online on a classified website. And then I had my room, and then I just like that was my start. I didn't have a lot of money, so I just bought what I could afford to buy by myself. I said, you know what? My aunt had given me that advice. She said, buy something that even if everyone leaves, you can still pay it by yourself. So that's what I did. I buy a super affordable condo on the Gatineau side, and then lived there for a few years, and rented some rooms, and that's how I got started.
Amazing. And I get asked all the time about house hacking, which is basically what you did there.
Yeah.
And that's a great rule your aunt gave you is if everybody leaves, what do you do? Can you still afford the place? And I'm sure that's guiding you now in your investments as
Oh
well.
yeah.
Can the property support itself with like half capacity or different numbers? So now fast forward to maybe not 2023. I want to go kind of halfway, maybe 2019 before the pandemic and all that. I know you were doing some big multifamily as well. So you did from a condo and now some multifamily. Can you tell
Hmm.
us more about your multifamily era if you're still in it as well?
Yeah, 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 I'm definitely still in it. Now I'm in a multifamily era, and I'm in a land development era as well, or like
Yes.
starting to do a bit of that. But the transition from buying that first property was that I ended up buying like another one after that, and then I ended up buying like another place with my wife. So every couple of years we'd buy like one thing. We'd use our own funds, 1% of our own funds. We do all the work, all the painting, finding the tenants, the property management,
Fun.
all the whole shebang. And it was moving really, really slow. And eventually, I found some help. You know, I found some coaching. I started getting into some communities. We met through one of these communities. And I was just like really thirsty for knowledge to be able to grow faster, get organized. And then that's when I tapped into some different groups, and then find a few mentors. And I started to learn strategies about how to go from where I was to leveraging up, working with not only finding good deals and multi units and the beauty of it, but also finding creative ways to work with other people as well, as opposed to working by myself or just with my wife, which was my girlfriend at the time. So that really helped me out, just like being able to not only find a good deal and then have to save for like a few years to be able to get it, but finding a deal and also finding people and then being able to connect people, deals, and opportunities.
Yeah, it's so smart because a lot of people think, oh, I'm going to save up. I'm going to use my funds and finance everything. That's great. Good start. Absolutely. I don't dismiss that. But just like you said, it's very slow. That's the turtle pace. That's how I started out as well. 2006, same idea. My wife and I, we bought a house and then it was
Mm.
ugly, blue tub, all that fun stuff. And then we bought another one, but it was always us. And then we eventually the bank started saying no, which I'm
Yeah.
sure you experienced. And then it's like, oh my goodness, but I see these people buying like 10, 20, 50 properties. How do they do it? How do they find this unlimited source of money? And you just mentioned it there, partnering, um, raising capital, most likely, and also getting a mentor. And I think you mentor people now as well, Stephen.
Yeah, yeah, I do. I 100% do. I think it's a great way to, give back to the community. Like, I don't think I'd be where I am if I didn't have multiple different mentors that helped me along the way. It's been like great. Some of them have been kind of like informal, and then some of them have been more formal, paid structure, paid coaching and whatnot. And but either way, like each opportunity has been great, and you can learn different things from different people and connect with different communities and grow that way. For sure, right now I mentor a few people, and my goal is to help as many people as I can get to the results that they want to through my experience or through my connections. Because I find that when you get started in real estate, you don't have a lot of access to a lot of things, and without the access, you can't, like, there's things that you just can't do. So access to capital, access to like a good network of people that you can trust, that can understand what you're doing and give you some great advice, access to the professionals that you need to be able to help you make some decisions that you need to make, access to good deals, access to
Yeah.
investors, like all these different things really help out. So sometimes just like having a right connection that can plug you into a few more connections, like it's great. Like I had someone reach out to me the other day. They were asking, they're getting into a new market that I've invested in, and then they asked my real estate agent that gave me a pocket listing in that market once. So I just gave that info. Like finding that one person could be like, months and months and months of like working to find that right agent or that right contact. So I definitely believe in mentoring and giving back and sharing and partnering up with people for sure.
Yeah, it's a game changer. And as you mentioned, you went through different mentors. And as you grow as a real estate investor, I find your network changes. You start hanging out with different people. Maybe you kind of refine your network as well too. Some people, it's not like you're using them or anything, but they're good along the way. Let's say when you started out with the condo, you had a certain team. Now
Yeah.
multifamily, it's a different team, and then land development again, that's a very different team. And you're also, I think you've gone international. I know you've covered a lot of Canada, and I think you've gone to the US if I remember correctly. So, can you tell us
Yes.
more about like geography, where you invest right now?
Yeah. So I invest in New Brunswick and Saskatchewan and also Ontario. When it comes to Canada, I've invested in Quebec at the very beginning of my investment career, but I've sold the properties that I had. They were smaller deals, like single unit properties. So I sold them and then focused 100% in multi units. So that's where I am in these provinces, like different deals, different size for different provinces. I want to continue growing in these provinces, and also want to like tap into other provinces as well. Um, and I've been exploring the U.S. like while doing this, like kind of like learning about it, making my connections, working with different people, really understanding the different markets. And I'm just starting now to really, I found like the team that I want to work with, or the few teams that I want to work with, and I've built like the level of confidence that I need to be able to move forward. Because when you invest with other people, like it's really like I think whether you invest with your own money or you invest with other people, like it's always important to do your due diligence and really be certain about your decisions. But I feel like when you have that added responsibility of managing someone else's funds, and they work really hard to get these like 50K, 100K, 200K, 500K, and then they trust you with these amounts. Like it's really like it's a lot of pressure. Like I don't know about you, but I feel
Yes.
like I'm like great, they're gonna invest, but then at the same time I'm like, oh my gosh, I'm responsible for this crazy amount now. So it took me a little bit of time to really feel comfortable with the US, and things are different too there in terms of like
Big
there's
time.
double taxation, there's like conversion of currency, there's a lot of different things. So all that to say that it took me a good year and a half to really do all my research and really figure things out, and I'm just now getting started there. So I have as we speak, I have a 38 unit deal that I'm actually like working on, and I'm making it possible for people to participate in. So but that will be like my first one that I'll be doing in the US.
Okay, excellent. I love
Yeah,
it. As you said, people are trusting you with their money. This could be their pension fund or their
exactly.
kids' education,
100%.
or some people I've met, it's their down payment on a
Yeah,
house, but then they're like, okay, we're going to stay as tenants and we're going to invest, which is smart. But again, you want to invest with the right people like yourself that do the due diligence and the research and the legwork. You make it look easy on social media. Hey, I have this 38 unit building, but you spent a year and a half researching until you finally find one. And I think it's important to mention it. A lot of people think, oh, wow, they're just like buying, buying. But how many deals did you look at before finding one that you think is worth it?
yeah. I think it's really important, especially getting into a new market, that you find the right opportunity, because that opens the door to being able to do more, right? If I do a 38 unit, like, and then it doesn't go well, like it's probably going to be
That
the
could
last
be
one that I do ever in a year,
it.
right? But if I do one and then it works out well, I have the right team, the right support system, the right people that wants to be in it, and they understand the deal, everything goes well, then it opens the door for, like, because it kind of becomes like kind of a case study in a sense, where it's like we're not going to do a 100 unit building like to start with, but we'll do something that we feel comfortable with, and then get it done, get the results, use it as a great case study, so that when a second, third, fourth, fifth one comes, it's like, well, you look, we've done this, it went really well. You can talk to so and so, so and so. They got their money back, they got their returns. Then it becomes like an easier conversation than if you start with something, it doesn't work well, and then like you never want to talk about it anymore.
No, you want to hide it. And I mean, there's a lot of cost as well. So you probably have a corporate structure in Canada that owns the corporate structures in the US, and it's plural because you need two layers. Well, not always, but anyway, for
Hmm.
my experience, you need two layers of corporations in the US, like a C corp and an LP or GPLP or
Yeah, yeah,
some sort of different corporate structure. And
for
there's a
sure,
lot of legal fees. So you're investing all that time, money, and effort, you want it to work.
for
And I
sure.
think that's where you get value in real estate is you create a model and you just replicate it. I'm sure that's what you've done in Saskatchewan, you mentioned New Brunswick
Yep,
and Ontario. So you probably find a place and you just keep replicating that, yeah, and growing, and then
exactly.
it gets bigger, then that's manageable. Like you said, you start something that's manageable and then grow. So from my understanding, you do syndication, or how do you finance your deals?
Like different deals are like happen different ways, but I do like a mix of GPLP and joint venture agreements.
Okay.
Depending on the deal and the size of the deal and who I bring on. Yeah, different structure for different deals.
Yeah, it makes sense. And it depends on your investor too. They're kind of in the driver's seat. Yes, you bring the deal to them, but I find all investors have certain things they need to check off. Some
Yeah,
people want no monthly income, they want money at the very end because they're already high earners. So they prefer like a big refinance balloon. Some people want, they're a bit newer, maybe they want something every month, every quarter. You have to negotiate, I guess, your deal and how it works. So can you give us some ideas of maybe a typical return? What would, yeah, let's say we invest. I know it's hard, everything's different, but what's a
um,
best case scenario?
well, I'll say, like, as real estate investors, I don't think we're supposed to talk about returns in that way, or that's
But let's
I've
say
been.
you double your money in a year, or
I'll say this, like, all deals are different, and
yeah,
like different investors want different deals. So the way that I go about it is that I try as much as possible to match the if someone has like a goal, right? They're like they want to invest for a certain reason. Some people want to invest for their retirement. Some people want to invest to get some immediate cash flow that they can use to do some things. Some people want to be diversified, so they have a need for, they have this in their portfolio and then they want to have something different in their portfolio. Sometimes people want to have, they want to have like they want to have interest rate that they get and then they know exactly what it's going to be. And then some people want to learn along the way and then be part of the deal some way somehow. Like everyone has a different goal when it comes to investing. So I never treat like everything the same. Like the way I go about it is that I talk to the people that are interested in potentially working with me, and then I really go deep and try to understand what's their reason for investing. Like,
Yeah.
what's the timeline that they have, like to get their return back? Are they looking for something like super short? Sometimes I'm not able to help them out.
No, that's it.
Or are they happy to stay in a deal for a year, for 2 years, for 5 years? Like what kind of like what's their mindset when it comes to investing? And then I take a decision on first, like, is there a good fit? Sometimes it's not. And then I'll say, hey, you know what? Unfortunately, I won't be able to help you. Maybe I know someone and I'm able to connect them. Sometimes like they have unrealistic expectations when it
Yes.
comes to investing. I'm like, no, like I don't know anyone that can do that. I'm not able to. I don't know anyone that can do that. And then if someone can do that, let me know about them because this is amazing. Like so based on these conversations and like if I'm able to help them out, I'll see what what kind of deal I have that can help them out. So if it's a multi unit, like you can imagine it'll take time to reposition the asset, right? Because a lot of the properties that I go after are properties that are properties that we can increase the value of the property, and we
Yeah.
can increase it either by renovating the property, increasing the rents, or sometimes it doesn't really need that much renovation. It's just a matter of like turning the tenants over and then being able to capture the rent that we want to. But it takes time, right? Like you can't come in and then boom, like you go from like a 38 unit and then you just like next month you have like 38
No.
new people, right? So you might do like one tenant every couple months, and
Yeah, it
then
could be years.
exactly it'll take a few years. So sometimes the returns are kind of like break even around the beginning, and then gradually they go up until we're in a position where we're able to refinance the money out. It depends as well. Like sometimes we have deals where our plan is to sell the property in 5 years. So, there's no point,
Yeah.
we're not trying to refinance the property. Sometimes we're looking at refinancing. So, like all these things change the potential returns. But I'll say like, you know, usually what I try to do, like for me to go forward with a deal, it has to be at least like break even when I get into it, unless I'm in a market where the laws are like really, really good when it comes to land, like they're really landlord friendly. And
Yes.
then I know for a fact like that I'll be able to achieve what I'm looking to achieve, right? Like there's markets, for example, in like in Ontario, for example, like you can't come in and say, okay, you
No.
know what, the rents are in the market, we'll put them at market. Like there's creative strategies, cash for keys, different things like that. But like sometimes you get stuck. You're not able to do it.
Yeah.
But there's markets like New Brunswick, for example, Saskatchewan, for example, and some markets in the states that I'm looking at where you have a clearer path from like where it's at to where you want it to be because the laws are more in favor of the landlord. So, but on average, I try as much as possible to get in a deal that's at least break even, so that we're not bleeding money. We're at least
Yes.
paying all the expenses, and then we have a path to get to a point where the returns are going to increase over time. So long way to answer your question without 100% telling you exactly the returns, but in some cases we have double like the investment for some investors. In some cases it's been like a 10%, a 15% return, 20% return, 5% return. It's like it all depends on what the investor is comfortable with, and then I try as much as possible to match the right investor with the right deal and the right management team, and it also fit as well with my lifestyle and what I want to do too.
So this was a trick question. You answered it perfectly. That's what I was hoping for, because some people come in and say, "Oh yeah, you're gonna double your money in 2 weeks" or crazy
No,
things.
no.
There you go. So reality check, people. I love this, Steven. You're very realistic. What is the end goal? And I love that you customize the solution according to the investor, and that's very important. I meet a lot of private lenders, investors, and either they have unrealistic expectations, some really crazy numbers, or like timeline in Ontario. Yeah, I want to turn over all the tenants in a few months. Okay, sorry, wrong place. So, like you said,
Exactly.
location makes a big difference. Where does the money come from for the investor? Then that makes a difference. Let's say it's borrowed money, they're using a line of credit.
True.
Well,
True.
now you're not dealing with the same investor. Now they have a monthly cost to
Exactly.
cover. So you got to find a deal that works for that. So that's really a lot of wisdom. I can tell you've been doing this for years. So, Stephen, what are you up to right now? Like, what's going on in 2023? We're already kind of past the midway now.
Halfway, yeah. No, for sure. 2023, I'm still investing in deals. I'm taking a different approach. I kind of pivoted a little bit, like at the last, towards the last, you know, part of 2022. I kind of like looked at everything that I was doing and made a few changes. I found that I was really like, on the grind, like working really, really hard, like looking at deals, analyzing deals, putting offers, buying stuff, and like I have kids, I have young kids. We saw, we met, we saw each other at
Really
real
little
estate.
ones.
The little one just turned 2, and I decided that I wanted to just be like a bit more present in their lives. I sacrificed a lot when they were growing up, and it helped me get to where I got now. But at the same time, I felt like it was time to make some changes. So I'll still do like a few deals every year that I'll be active on. So right now I have the 38 unit on the contract that we're working on, and then I have a 18 unit that I'm looking at as well. That's a bucket listing that I'm waiting to see if I'll put an offer on. But other than that, like, I probably won't. I might do like maybe one more this year, but like
Okay.
2 to 3 deals this year, I think, like that I'm gonna be active on. But for the most part, other than that, I'm like I started to be a bit more passive. I'm lending funds. My RSPs I've been lending them. I have some cash due that are coming back from deals that I've been lending on as well for short term like deposits and different things like that. So just lending a little bit more is one of the things that I'm doing a bit more. And another thing that I started to do a bit more too is that I have like some great skills when it comes to marketing. And I felt like I was neglecting them and I wasn't really using them, or I was using them but only for myself. So I started to just look at ways that I could help people that are in the real estate industry. So real estate agent, mortgage brokers, other real estate investors, and I've basically put a team together where like we're offering marketing services for people that are interested in either getting in front of like more people that they can talk to that have the possibility of investing with them, or they're looking at finding more clients for their mortgage broker, or as a real estate agent, they're looking to be connected with more real estate agent. So we have this really great system that we use. That's what I've used mainly for myself as well to raise a lot of my capital that I've raised. And then we're just basically making it available for people. It's a subscription service, and then people can connect with me. We could go over what it is, and then if that's something that fits for what they're doing, I bring them on as client, and then I basically take care of all the legwork that goes into
Yeah.
reaching out to people, vetting them, and then I deliver book calls, book appointments to them on a platter on their Calendly account, and then they just have to show up on the call and build a relationship and go from there. So
That's
yeah, that's,
amazing.
that's what I've been working on these days.
That's amazing, because I tell people on this podcast all the time, you have to market yourself as a real estate investor. So at
Oh yeah,
first, yeah, you fund your deals, things like that, but then you run out of money, and
100%.
then what do you have to sell? It's yourself.
Yeah, yeah,
So
yeah,
your
exactly.
experience, your background, and like you said, if you're a mortgage broker, a realtor, how do you stand out? How do you market yourself? Again, it's all everything is marketing. That's why I love marketing.
I love marketing too.
Very smart move, Steven. I think people, I'm sure, are really enjoying it. And as you said, it's turnkey, so they don't realize all the work that goes in it.
Oh
You've
yeah,
perfected this over many years, I'm sure, and now you have a formula that works for them. So again, you're making it look easy, but reality is if someone's starting from scratch and getting these systems in place, it's hard. You got to try different systems. I don't know if you have virtual assistants, you got to find the right people, the right click funnel or whatever you're using and setting it up. I don't know if there's email like drip campaigns and filtering people, as you said,
yeah,
that's a
yeah,
big
yeah.
one.
There's a like virtual assistants is that I feel like is a must in this day and age. Like having a few people that you can rely on that is part of your team that may be overseas and they can help you out is like a great way to leverage, right? Like as real estate investors, I think leverage is like really important. So, identifying some tasks that you do on a regular basis that can be done by someone else that you pay a little bit less than what it would cost for you to do it. So I definitely use virtual assistants. I use some softwares. I use skills and knowledge that I've acquired over time. Um, and then yeah, package all that together in a way that I remember like as I talk about that, I remember once we used to go on these walks before, me and you and a few
Yes.
people, and yeah, like once we had a conversation about like having a pipeline and having like a certain amount of capital in your pipeline. So let's say you have like a few investors, that's great, but then like just growing that pipeline of investors so that you have like more like available cash than deals that you have to fund, so that you're never really running out of money for doing deals. And that's why you can do like you're the same, like you're just always like networking and connecting with people. So I find that sometimes investors are neglecting that piece. They're
Yes.
finding deals, looking for deals, and then once they have a good one, they're like, okay, I have something on the contract now. What do I do?
They're scrambling for money. You don't want to be in that position. That's you never look for money when you need it. Always look
Exactly.
when you don't need it. So
Exactly. So I guess like the concept is that build that pipeline, have like a lot of people in it, a lot of money in it, and then once you have a deal, then it's more your investors fighting to get on a deal than you like
yes.
begging people to like please invest in my deal. Like I only have like a certain amount of time to close on this deal. Like and I really need you to like it's just a different like you you never want to be needy in this space, right? Like you
No.
want to come from a position where you're offering something, you're adding value, but you're not like the opposite is not really appealing.
Nope, I know. And when I first started out, I was in that situation. And like, I have this place and I have 10 days to fund it. Okay,
Yeah,
that might not be realistic with like no funnel, nothing, no pipeline of investors. So if you have those investors, they're ready, they see sample deals, different things. You have to keep them excited as well. So you have to have that funnel, but you have to keep them warm. It's not like, okay, I have $1 million, not a word for 6 months. That person's moved on,
yeah,
hopefully.
yeah,
So, but let's say you keep feeding them with potential things and then they finally see the right deal. Okay, now I'm ready. So that's really important to have kind of a sales system. I was in sales for many years as well. I used a CRM, Salesforce, but there's all
nice.
kinds of free like Zoho or ClickUp or all kinds of CRMs you can use if you have a smaller budget because Salesforce is very, very pricey. Um, HubSpot as well has some options, but again, that can get quite high end depending on
But it's
what
worth
people are
it.
doing.
It's worth it. Like when I started, I was so disorganized when it came to these things that I'd missed out on being able to do like things with people just because I forgot about them. You know,
Yes, that's
like
the worst.
like imagine having like hundreds of thousands of dollars that you forget about in your pipeline just
Wow.
because like you're just, you know, like I don't know, like I think like having a CRM, even if you have to pay like a few $100 for it,
Yeah.
like it's so worth it. Like, you know, being able to go back and see what conversation you had with someone a year ago, like, and then being able to say, just pick up the conversation for where you left it off last time is like really, really powerful. Because when you talk to multiple people every day or every week,
Oh,
like
you forget.
things start just becoming really blurry. Like it's like we're having this conversation today, it's fresh, but then a year from now, if it's not logged anywhere, it's like, what did we talk about again? Like, you know, what was he interested in?
You
Like
start over.
exactly. So no, it's worth it. Obviously, it's a bit of a cost, and but it's worth it. I think it's worth it, and I'm sure
Oh,
I'm sure.
yeah.
Yeah.
Huge value. No, no, no. It's more I was saying like Salesforce, some of them are $5,000 a month. That might not be where you start, but as you said, a few $100s a year or even $200 a month, whatever, that's worth it for millions of potential money. Absolutely. It's the really high end ones that require a whole team to manage. You
Hmm.
want something that's simple as well, you're comfortable and mobile. As you mentioned, you go to lots of networking events. You want to write those notes down as soon as possible because time flies and you forget
Yep.
about things. So it's great. So, Stephen, thanks so much for sharing about your story and your wealth of knowledge. If my
Thank
listeners want to get a hold of you and learn about your marketing services or invest in a deal, what's the best way to get a hold of you?
Great, great question. So I'm on social media. Facebook is one of the networks that I use the most. So that's a good way to reach out to me. I'm also on Instagram and also on LinkedIn. If someone wants to potentially invest with me or learn about some of the deals that I have, take a look at them, see if that's something for them. Investlikesteven.com is, you know, you just go in, type your information, and like you just your email, and then I'll be able to like send you some opportunity. Just, you know, get in touch with you, understand a little bit more about what you're doing, what you're trying to do. So that's the best way to go about it. And if someone's interested in marketing services, they're looking at raising capital, and then, you know, they want to be connected with people through like a system where we book calls for you, or you have a mortgage, you know, your mortgage broker or real estate agent looking for some clients. Again, social media is the best way. Facebook, I'm just like one click away. You just like send me a quick DM, and then we'll set something up. I'll also do like a webinar really soon, so look out for that, and then maybe I can let you know as well if you want to potentially share it. I could let you know about it, but I'll do a webinar really soon and bring some people on, social case studies, and show people how you can basically just like have go from where you are to having like a really cool system in no time, where you'll be able to like talk to multiple people on a regular basis, and then, you know, increase your pipeline that way.
I love it. Thank you so much, Stephen. That sounds amazing. Everybody, reach out to Stephen if you see a fit here. I think there is for many, many people. And it's been a pleasure. We'll have to catch up again in a while and see what you're up to. Thank
Yeah,
you very
yeah.
much and cheers.
No, my pleasure, Francois. I'll probably come to one of your networking events. I've seen that you've been starting to do a bit more in that space, so I'm hoping to come in and join you at one of them sometime soon.
Yes, the Capital Connectors. I'd love to see you there.
Perfect.
Thank you.
My
Cheers.
pleasure. Thank you.